Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, how is everyone doing? Happy Wednesday. Happy live stream day. So we are looking at a pretty interesting couple of weeks. Today, we really need to talk about this Bitcoin move. So we have we just had this long, slow bleed. It looked like we were starting to make a change in momentum and then fully dropped off a cliff. And then we went almost silent for about 10 days. We had a little bit of a move in the middle. And if you go to the 4-hour chart, you can kind of see where this broke down. Yeah, so the 4-hour chart, we kind of started getting close to the 50 period moving average. And then we went full sideways, very, very, very quiet. And then the news broke. And I was actually watching the market, and I watched the 1-minute chart, and it just went up $600 in the first minute, and I was like, whoa, what is going on? And then I saw that Grayscale won there, won that reversal. So there is no ETF, but the market will do this again if an ETF actually gets approved. So we're kind of in a very interesting spot. So I was really, really having a hard time kind of dissecting this with the pros last night, because we had this phenomenal close. The resistance at the 200-day and the 200-week are both right on top of each other. So today they're even closer. 27,488 and 27,329. They're $150 different on a $30,000 asset is pretty close. I mean, it's negligible. So this should have been an absolute bulletproof resistance. And on the shorter time frames, if I go back to the 4-hour, our first move stopped there. This is the daily. And then we continued to move up. We hit the 200 almost to precision. It was within $2 of the 200 on the 4-hour. And then we kind of melted down, and then we started showing resistance against the daily on the lower time frame, this 4-hour. So what are we gonna do now, right? So this is where things are not quite so easy. By the way, I was expecting this to happen, where we would come up and reject. We've got our golden cross. Our angles have slightly changed because of this move. The 50 is a little higher, and the 200 is moving up a little bit. But I'm not sure. We would have to do some pretty awesome stuff up here to avoid a death cross, but I still believe it's coming. Right now it's scheduled for about September 10th. If by natural just course of action without news, we came up to about this range, I would fully expect us to reject. Last night we closed above the 200 daily, which is a pretty monumental effort, because we've been, it has been support for a long time, and when we crossed below it, the next thing that usually happens is that it becomes resistance. Well, I mean, there's a case that it's resistance because of the up and down the very next day. We kind of need to hold it for a couple of days, but closing above it was a major move. So this kind of put a question mark out there as to are we weak or are we strong? And it's kind of a tough read. So there are a couple of things to think about. First of all, I wanted to point out this. This huge drop here was a cascade of liquidations. The move up here was a little bit of short liquidations, but there were a lot less people going short than there were going long. And I'll show you the data on that. So this is our liquidation chart right here. And you can see on this day, this is August 16th, how gigantic the liquidations on the long side. So these are the people that put leveraged longs in. 850 million was liquidated. And this particular chart doesn't give me more than a couple of months, like I guess 3 months. So we can't go back and see, the FTX days, at least on this chart. But I know that they were huge. So this was almost as bad as the FTX days. But if you go to this day, see this tiny, tiny little red candle? These are the shorts that got liquidated on the way up. So you can see that nobody's shorting this market. Everyone's long. If anyone's trading leverage, they're long for sure. So that definitely did not put much pressure on the upside. So we had a huge move with no news to the downside, and then we had this really strong move, but it wasn't crazy, you know what I mean, to the upside based on news. Well, you can't base everything on news, because once the news is over, it's over. So we really need a trend. We really need a little bit more strength. So this scenario could play out. It could if we show much weakness. So now let's talk about the structure of this chart. So in order to get a momentum shift, we need to go from lower highs and lower lows to higher highs and higher lows. Well, what makes this chart so hard and what made this drop so devastating is that our most recent high was here. This is all the way up at nearly 30,000. So in order for us to get a momentum shift to put in a higher high, we have to go all the way to 30 and go higher. That's on the high side. I don't think that's going to happen. So the other way to get a momentum shift is to get a higher low. Well, we have pretty decent low here, but what we need to do is we need to spend some time in a range up in here somewhere. And then we need to come back for a pullback, and it needs to be higher than this. The challenge is that we're trading pretty close to the low of this entire range. And so this could just be another lower high, and we could just melt off. So where's the switching point? And this is where we're really on the fence. And this is what makes this particular move a little bit hard to read, is that we have a very, very strong candle moving all the way up to here. What we don't want to do is get down to the middle of this candle. If we get to the middle of this candle, we are showing more resistance because the wick is longer on the top than the wick at the bottom. And so even the middle is a little questionable whether, staying above the middle would be very bullish. I know sometimes it's helpful to intersect a wick here and then move, but if this is the buying climax and we start ranging and spending a lot of time down here, it depends, like if we start selling off and we get back down to this range, then look out below. It's not going to be pretty. But if we can stay up here, even if we can just stay up here for a couple of weeks, and then we have some kind of pullback and it's not very severe, it's definitely higher than this, suddenly we've got our momentum shift. But I'm not quite ready to, fully jump on the bandwagon of yes, this is totally happening. But I'm still optimistic. So here's where this breaks down. So I'm going to put in some Fibonacci's just for here, just so we can see what percent we're moving. So if I just look at the candle body itself, our 50% mark is at about just below 27. So 26,916 is right here. So if we stay above this, then the odds are better that we will remain bullish for a while, and we'll put in some kind of a, some kind of move up in here. If we drop below this point, we're going to have a lot of resistance pulling us down. And that paired with our most recent high that's way up here, this is going to be just ugly. It's not going to look good. So, we're kind of due for a momentum shift to the downside because we've done such an amazing job putting in this high and this low and then this one and then this one. And then here we kind of fizzled out. We didn't quite make the jump to a new high where we could pull back to establish this as support. We kind of fizzled out a little bit. Now we're going sideways. There's a tangible difference that we're kind of moving sideways. And so this is kind of where, this is where it feels like it's going to be a little hard. We've definitely got some uphill battles to go. And not only that, but we have, this death cross potentially coming up in about 2 weeks. There's some forces that are working against us here. So we kind of have to be, we have to be sensible. We can't just drink all the Kool-Aid of, hey, Grayscale is awesome, we're going to the moon. But we also, but the Grayscale thing is tangible. It's the type of news that will have long-term ramifications. I always like to distinguish between news that's over and news that really has a long-term effect. And the SEC losing face, and now we have more senators and Congress people putting in bills to remove Gary Gensler and things like that. That's one thing. But the other thing is we now have legal precedent from these judges that said, no, you can't blame it on this, you can't blame it on that. All the excuses that they were using was completely shot down. There was no excuse that they had used to deny Grayscale's application that held. And now that that's the legal precedent, in the future, there's less resistance, because now there's a precedent that says you can't use these excuses any longer. So long term, there is now the other ETFs have a much higher chance. And believe me, if an ETF gets approved, this jump that we just barely witnessed, it will happen again, and it could be bigger. So it is actual news, and that is a big difference. So this is very positive, but I am a little bit nervous if we get too low on our close. We don't want to erase all the progress that we made the very next day. And today we're just really testing real lines that we really don't want to be crossing. So let's look at it as a worst case scenario. So I'm gonna actually bring this up to the top wick. So I'm cheating a little bit because I'm not using the bottom wick. I'm just using the open and then the high. This was the highest point we ever made it to yesterday. And now where's our 50% mark? It's right at 27,130. So I would kind of consider this 27,130 as a potential switching point, and we're kind of right there. I'd really love to see us pull up a little bit further by end of day. And what I'd really like to see, and by the way, end of day is in 5 hours and 15 minutes. So we have a lot can happen in 5 hours, a lot. But what I'd really love to see is this. Do you see this little red line right here? This red line is the 20-day moving average. And this little red line, if we can hold it as support, so we break through the 20, come back and find it as support, now we're on the upper side of the daily Bollinger Bands, and a lot of indicators love this 20. If we could hold that and at least show that as support, it may be that we lose the 200, but we didn't cross it by a ton. But hopefully, if we do something like this, we may recross the 20 or the 200 tomorrow. If we did a little S where we kind of pull up, pull down a little, and then revisit our resistance point right here, Boy, that would be extremely bullish. I'd be very happy about that formation. So it really depends on what the shape of our close looks like. Obviously, the higher the better. So that is, is very important. I'm going to go to a little bit of a lower. Actually, we'll go to the lowest time frame. Let's look at the 5. So this is part of the reason why during the stream we're pulling up a little bit. So this is our giant move. Exit the red zone, completely vertical. One final push here, and then on the 5-minute we exited the green zone here. So this was kind of one of those. Are we, how well will we do after we lose the 50 on the 5-minute? And we did not do too well. Like this exit would have been, in retrospect, it would have been a great move. 27,850. But we kind of pulled back and we never got back into a green zone. And I kind of expected that we'd probably have one if the news was going to last a little bit longer. But we kind of went straight into our death cross. And now we've been in red zones on and off throughout the last 12 hours or something. Just now, we exited the red zone on the 5-minute, so there could be a little bit of a bounce here. I do see higher lows coming up, so there is a little bit of structure on super low time frames. So if any of this can push us up and give us a little bit more strength by end of day, it'll be awesome. But it's hard to put a lot of clout on a lower time frame like this. So anyway, we'll kind of see how this plays out throughout the day. But yeah, that's kind of where I'm at with Bitcoin. The only other things that we need to watch is the higher time frames. So now we need to watch the weekly. The weekly had a really, so since I've been doing these videos like kind of once a week, we really need to spend time looking at the weekly every day. Every time we do these videos. And so the major event that happened on the weekly is that when this large candle came through, it broke our 20, it broke our 200, and it stopped right here on this green line. This green line is the 50-month moving average. So we'll look at the monthly chart next, since I think today's the last day or something. What is it, August? So tomorrow. So we got one more day on this line here. But then we had this reversal candle, which is positive. So on the weekly, we've gone down a lot, and having a reversal candle here at the bottom of this move is also positive. So this at least will give us something. I don't know if it's a full reversal that we, go back up to, new highs, but at least we should get some kind of a bounce out of this, which we are seeing right now. The challenge is on the weekly, here's our 200 week. And we are currently at resistance against it. If we could pull up to 27,600 by end of week, it would still be resistance, but at least we'd have a chance of, a pretty solid chance of trying to cross it. If not, we really could reject for a while. And in fact, the 50 week is probably our first place to catch support. That's sitting at 24. So time's ticking, and this is increasing, so it's slowly getting there. So anyway, this really feels like a worst case scenario, but going down to 24 or 23 could be pretty painful. So there's, we've got some work to do to change the momentum here. So the other thing is that we kind of had a long wick that rejected off of the 20. So we're definitely on the wrong side of many of these resistance points. The most bullish chart out of all of these is probably the monthly. And believe me, you want the monthly to be the one, you want that one to be the bullish chart, because the lower time frames will have less power than the higher time frames. So I really like what I'm seeing here. We're definitely showing a ton of support off of the 50-month moving average. So here we've hit it as support here. We definitely crossed the 20 on the monthly, and then we've had a full candle to show support. This confirms the breakout of the 20. The last step in the process is to come back and find the 20 as support. So it's a little hard to read, but it is here. I've got my mouse right on it. So it's 27,578. So tiny bit higher. Yeah, right here. This is where the 20 is. If we could pull up and hold this as support on the 20-month, man, that would be phenomenal. That would give us a really, really strong chance of moving. I don't know if next month we will cross the 9 and the 20, but we're getting very, very close. The last time we crossed the 9 and the 20, it was here at 8,200, and it was a wild ride. But we still managed to kind of hang on to the 20, even with this insanity. And then we moved into our bull market. Normally, when we get this cross, we don't cross back. So in 2016, we crossed the 9 and the 20, and we were off. So I kind of feel like if we do cross the 9 and the 20, we're not going to switch back. So that means the bulk of the really ugly should be behind us. So that's kind of how I'm reading this on the monthly. So yeah, just to recap, if we can hold above this 20 on the daily and spend some time up here, even if we have to reject off of the 50 or something like that, it would be really nice to get up here and test some of this so that we can pull back and have a higher low. That will give us our first real shot at a momentum change. Because if our new high is around here and we've established a higher low here, suddenly we can get the strength to break some of these things and change our momentum around. And that's kind of what the ideal situation will be. If in the next few days we just erase this candle, it's not going to be good. It's not going to be good. So if we really pull back after this much effort and we get down into this range, like 26.5 or something like that, it is not likely that this will hold. We're probably going to put in a new low. So that's Bitcoin. Ethereum, let's go ahead and just start top down on Ethereum. So Ethereum looks like this. Ethereum looks a little better because our resistance point on the monthly is about right here. And we reached down and touched it and pulled back up like we were touching a hot stove. So on the monthly, we're showing perfect support off the 50 month, and we're just above the 9. So we're doing the same thing where the 9 and the 20 are about to cross. The difference is that Bitcoin's already above the 20. We're showing resistance to the 20. But now that we've kind of got this beautiful shape here, a couple more months and we're above the 20, we could really take off. So Ethereum's really primed. It doesn't look quite as good on lower time frames, but we'll take a look right now. So, I mean, on the weekly, it does not look bad either, though, because really long wick and holding a perfect flip from support or resistance here to support here. We did slip through it here, though, so that kind of makes this line questionable. But what we did do, this candle, is we got this kind of a hammer looking candle, and we supported the 50 and the 200. So hitting the 200 and the 50 and showing support on that is beautiful. Like this is kind of like entry point land. So this really feels like it could be the end of the drop on Ethereum. This is pretty strong, holding these lines here. It's funny how the 50 and the 200 have crossed up and back. It's just they've just lined up magically somehow, because the 200 starts back here. So we're looking at an average including all of this, and it's just somehow climbing at the rate that the 50 is climbing. So we've had death cross, golden cross, death cross, and soon, if we get another golden cross, I think we'll be done with our fake outs and we'll be out of here. So it kind of feels like a couple more weeks and Ethereum could start turning around, which would be really nice. The daily's not looking so good. Where Bitcoin was struggling with the 200, we're not even close. But what we are doing is currently rejecting off of the 20. So that is not super great. Okay, let's just zooming out to see what this line is. So this was our first resistance point this year. And then we hit it as support here, slipped through it here, and now we're kind of playing with it. Excuse me. Now you know this is live. So we did break through it. We're rejecting off of the 20, and with 5 hours to go on the day, we can't look at where we are right now because of that. But we do have a beautiful flip from all of these resistance wicks have intersected with our wick today. If we hold above this line and get back above the 20, Ethereum could look actually pretty strong. Like this could look pretty good. Let's do the same thing that we did with Bitcoin though, and just double check where our middle ground is. So if we go from bottom of the candle to the top of the candle, our 50% point is 1690. We're currently, the daily low is 1694, so we've stayed well above. This is hard to read. This number is like 1699. So this is our, what is that, the 38 fib? So that's, so we're staying above that, which is good. From a technical standpoint, we're looking a little prettier, staying near the top of the range the day after a giant move like that. So if we manage to close above 1711, it would be really bullish. That'd make me very happy if we could do that. Worst case scenario, let's just pull this up to the top of the wick. Worst case scenario, our middle ground needs to stay above 1699. So that's as ugly as it could possibly be. But the nice thing is that this candle is a little more balanced. You can see that the wick is fairly small and it's about the same size on both sides. So that gives the middle ground a lot more clout. So if we can hang on and stay up here, we'll be in great shape. That would be pretty awesome. So anything on lower time frames, we'll just take a quick peek. Looks like this 5-minute candle is an attempt at an exit of the red zone. Just barely. So I don't know. We'll see how much, where this helps, where this ends up at the end of day. But yeah, pretty decent move on Ethereum. Pull back, new highs, lost the green zone, and then we've kind of pulled back. The drop hasn't been as intense though. I noticed earlier when we were ranging up here, Ethereum's drop was only like 0.5%, and Bitcoin was like 1.25%. This was earlier. And so Ethereum has actually held onto the gain a little bit better, which is cool. A lot of the price action is happening when it originates with Bitcoin. That kind of causes that. But yeah, so we'll see. We'll see if this exit of the red zone makes a difference in the short term. It'd be nice to flip this upside down and get a golden cross on the 5-minute leading into the end of day. That'd be pretty sweet. Okay, so but yeah, so Bitcoin's getting a little excited since we've exited the red zone a little while ago and we're moving up a teeny bit. So we'll see where that ends up. Yeah, there aren't too many people on today, so don't have any questions. So I'll just look at a few things, and then we'll just wrap it up for today. One thing is, I've been watching this Bitcoin to Ethereum ratio. This Bitcoin to Ethereum ratio is sort of our indication of whether we can expect an alt season or not. And currently, after yesterday's strong Bitcoin move, Ethereum did not move up as strong as Bitcoin did, and so the ratio dropped. We're below the 50 on the Bitcoin to Ethereum, which is not good for alts. So Bitcoin's taken all of the it's taken all the headlines and all the excitement, and Ethereum's just not keeping up. So we may need to wait. The problem with this chart is that we've dropped a lot, and our momentum move is starting to give us a sad face. The frowny face is not what you want to see. So we're definitely pulling back, and there could be more downside, especially for alts. So be careful getting into alts. I took a few yesterday, and I guess I just got lucky because the one I ended up with was API 3, which is doing well, and everything else is red. So not super great out there. Yeah. So apart from that, that's kind of our market. We haven't looked at some of these really long time frames. So let's see. The total market cap seems to be holding the 50 on the daily. That's positive. On the weekly, we're definitely below our 50, and our 200. Wait a sec. What was I on? Oh, the weekly. Yeah, we're holding onto our 50 week, so we've already touched it, and we're moving off of it, which is good. We're ejecting off of the 200 week. So eventually we'll get a golden cross, and on the weekly that will be like that's when you go all in on that. That'll be a huge move once we get our golden cross on the weekly. But we're still waiting for that on the total. If you take out Bitcoin and Ethereum, you can see how we're resisting the 50. So we're dropping back. It's not looking very good for alts. So pretty good. Thanks for saying hi, Chris. I appreciate that. Says great video. I bought a Riot miner yesterday, 17% up. So far, so good. Good to hear. Congratulations. But yeah, I'll just let you go there. It is. We just have a market that is pulling back a little bit, and we just have to be a little bit careful on that. But we also don't want to be too out of the market, because if news comes through that the Bitcoin ETF is approved, the jump we saw yesterday will happen again. And we want to be on the right side of that. Do I think it'll happen Friday, September 1st? I don't. I think that the SEC is a little bit too stubborn to just roll over and die. They will find everything to save face, and they will push as hard as they can to make themselves, to look legit, even though they're really they're looking pretty ugly right now. So, okay, we will catch you all later. Thanks for being here. We'll catch you next week, next Wednesday.
Thanks for making it to the end of my video. So just remember, keep your trade small, be patient, wait for the trade to come to you. Don't get caught up in all of the hype. You guys are going to kill it.